All right, welcome guys, welcome to Monday stream. We'll get things going in a few short minutes. Just letting everyone get their notifications. All right. Okay, hopefully everyone has been enjoying their night here. All right. Oh.
Discovered yet.
Oops. Let's check if everything is running smoothly. Okay, I think the audio is fine. I'm gonna lower the music as well. I did get a recommendation from someone that I should lower the music or not have the music at all, but I know some people like the music, so I'll try to have it very low. Okay, let me make sure people are know that I'm live. Oops, my charger. Okay, let's get things started. All right, everyone. How is everyone feeling? Good? Good. All right. So, welcome guys. Welcome. Ooh, what is that? 5 likes? 9. Oh no, 4 likes. Welcome guys. Welcome. Make sure you guys hit that like button. If you guys are here right now. All right. Okay. So, tonight we're going to be talking about one specific ticker that I wanted to go over. It's from the CFO Swinger Watch Report, as always. But anyways, we're first going to go over the market stuff before we talk about that. So, today we had a pretty solid bounce for the E-mini futures here for the S&P 500 here. Or again, the futures for SPY here. Has a pretty solid ceiling and a wall at $6,650. Okay, and so far, even tonight, overnight, it has been a ceiling. Pretty much a large ceiling that buyers aren't able to get through. However, once this overall Iran war shenanigans and negotiation shenanigans are concluded, we should be seeing a massive breakout over the 6,650 level. Okay. Now, how does this translate over to SPY? For SPY, we have the ceiling at 600. If it's gonna low, $660. Okay, so this is the major whole number level, and so far, we've been kind of been consolidating from last week's massive bounce. Around 655 to 660. So that's kind of the 5-point range. But if you guys want to be more specific on the levels, well, you guys should know that I have the 654.50 level that I've been using as a major level of support here. And I was very thankful to the markets that we were able to close over 654.50 multiple times. So last Wednesday and last Thursday. Okay, and that solidified pretty much a nice uptrend day today, even though we had ups and downs early in the morning. Okay, now from a longer term perspective though, okay, we still need to retest the daily 200 SMA, right? We need to get back over it. And if we were to retest it, or ideally I would love to see an inflection back over the daily 200 SMA, but I'm most likely going to be expecting a nice rejection off of it. And here's where the macros come in, right? Because if Iran and the U.S. government decides, and well, I guess Israel as well, basically agree to the supposed peace plan or a ceasefire, officially, right? They both say all parties agree to it, and they don't fire any missiles at each other or counter missiles, whatever it is, counterattacks. I think the markets will actually move lower, right? Because we're moving up in anticipation for the official ceasefire or potentially multi-year peace plan, whatever Trump might be calling it, right? So that could occur where we can see that retest of the daily 200 SMA, this yellow line here again, right? And then we smack back down as we reject off of it because the fact that that news came out and the overall move up higher from last week was just in anticipation for that news, right? But again, we haven't received the official news yet, but we've been moving up in anticipation for that news. Okay, so that's kind of where we're at now. Now, currently, okay, let's talk about my overall long-term view on the markets because as you guys have seen in the description box below, again, I always highly recommend you guys to read the description box down below first before you guys listen to what I have to say in the stream. But I want to give you guys some indicators that I've been watching for how the market can be reacting off of certain economic reports and data. Okay, so first of all, we know that unemployment rate has been ticking up and has been at local highs, and the overall job market has been showing significant signs of stress and cracks, right? And that's exactly what the Federal Reserve does not want to see happen, because now they have the current dual mandate plan is being derailed by the Trump administration, and we've already talked about this before that's what they're going to do, and they're trying to run the economy pipingly hot to basically outshine, okay, quote unquote, outshine inflation, right? And the fact that the economy will be churning in such great amount, as I think someone said that. I don't know if it was the Treasury Secretary Besant, but basically he was saying something along those lines, saying that this is how we won't be in a recession, or we will never see a recession in Trump's second term, which is not how things work. Surprisingly, I don't know what has gotten into Besant's brain or any of the other people in this current administration's brains, but they're giving these very, very just awful economic plans and ideas, right? Even though, even for a person like Besant, who worked with George Soros, they have a lot of experience, right? They know how the economy works and how the markets work, but they're having this crazy ways of doing things, which is why it's insane that they just seem to be so afraid of Trump, even though this is supposed to be a democracy. We're not, in an autocracy or in a dictatorship, right? So this type of uncertainty is what's causing a lot of volatility in the markets lately, and we've seen that a lot of volatility in early 2025 as well with the tariff tantrum, right? Where Trump was basically acting as a child, and he's still acting like a child and being whiny, right, about the conditions that he have caused currently with the overall economy and the global economy, and so. The markets are reeling from this, and it's and my basic long-term view based on all of that is that we're going to be seeing volatility, and volatility is here to stay. And the VIX, as I've stated even before the year began, will have an affinity to stay at 20 or above 20, and that's what we've been seeing for this entire year so far. Okay, so the first thing that I want to take a look at is the U.S. money supply, right? The M2 specifically. So this is, if you guys don't know what the M1 and M2 money supply is, please learn it. Just Google it. Okay, I'm not gonna go over it. I went over this many times in 2022. I've written extensive amounts of information on M1 and M2 during 2022 during the bear market. So please read it for any of my readers out there who still have access to the 2022 CFO Swinger Watch Reports. But generally, right, from a general definition perspective, the M2 is a combination of different components. So M2 encompasses the M1 component of the money supply, of the US money supply, and combined with retail mutual market funds, okay, or mutual funds, excuse me, and saving deposits, right, and CDs, okay, so certificates of deposits. That's what I mean, CDs. If you guys ever, if you guys watch, for example, like CNBC, they talk about CDs a lot too, when they're specifically talking about the money supply. So that's exactly what it is. All right. So essentially, it is the overall total amount of US dollars circulating in the overall US economy. That's basically the general definition, and basically what it's tracking for is the overall so liquidity, right? Because I'm trying to make sure I remember what I wrote in 2022. It's just to summarize everything. So basically, cash, right? US dollars that are circulating in the economy is basically liquidity, right? And also it's basically tracking future economic growth based on overall inflation as well, because how much money is circulating in the economy can also really tell you what's happening, right? Because if you just take a look at this right here, in 2022 we actually saw the economy cooling off and contracting a little bit because you guys can see this, right? The M2 money supply began to curl down, right? It flattened out and started to curl down. And usually when we tend to see rising money supply, we saw a dramatic rise in the money supply in M2, right? Post-COVID here, right? Or during the beginning of COVID. And that's kind of what propped up the overall US economy and the US market. You guys remember, the market it essentially went parabolic as money was basically injected into the US economy, and that's exactly what this is showcasing here. And again, like I've said before, where it seems like the US government officials are again trying to run the US economy piping hot. And we're seeing the M2 line curling up higher and higher. Now it rose sharply in the past month, and at the start of this year actually. So, I think it's starting to come into fruition of what they want to do and what they want to do with the U.S. economy. But this can also be so when it comes to finance stuff. I obviously don't have a degree in finance, but I would say it's kind of a gray area when you're tracking the M2 or even just the M1 itself. If you guys didn't know, the M1 is basically checking accounts. That's kind of what I gleaned off of it when I personally learned about M2 and M1 money supply a long time ago. Just to think about it like that, or just checking accounts. Yeah. just think of it like that. Okay. And it's the overall M2 money supply. It can be. Let me choose my words carefully. So it can be an indication or indicator of pressure from inflation, overall inflation, core inflation, and whatever. There's just overall inflation. Okay. And so, if M2 is growing rapidly like we saw here, right, inflation got out of control. We know that, right? It's a very good example in the most recent decade here, in the 20s, right? So this could also be a problem if you see a massive rise up higher. And obviously, assets, right, risk on assets can also follow a rapid increase in M2, 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 sorry guys, in M2, as I explained before. So, I think if we have a very brief period of where we see this continuation of the M2 money supply continuously moving up higher this year, there's a good chance that by early 2027 we can be seeing the M2 line here starting to curl back down, right? So it flattens out like this, like what we saw in mid to late 2021 and into 2022, early 2022, and then after that we saw this curling downward action on the M2 line here, and we continue to move lower into 2023, right? And I think we can be seeing that as we head into 2027 and essentially follow exactly what we've seen so far from 2022 to 2024-ish, right? I think around here, yeah. Okay, so that's kind of the one of the indications that I'm looking out for as we head into the end of this year and into early 2027. If you guys saw my recent Instagram story, let me try to give you guys exactly what I said here. So it was a post by MarketWatch saying that, quoting Jamie Dimon, right, the CEO of JP Morgan and Chase. He said that he warns rising oil prices could trigger a recession and a bear market in 2026. Okay, sorry guys, I need to drink some water. I'm talking quickly back to back. So what I've said in response to that is that I would say in early 2027 for the actual economic contraction to begin, with fears of a potential recession and a bear market hitting peak, right, mid 2026, right, and that should line up with what I have in store for late Q2 and early Q3, and I'll be going a lot more into detail as to what I mean by that in the CFO Swinger Watch Report in the weeks to come. Does that make sense, guys? Okay, so hopefully this is all kind of coming together. What I'm saying, what I'm telling you guys. Obviously, I'm not going to be sharing you guys the exact, time frames of what I have planned and what I have analyzed about the market so far. I'm going to be writing it in my official CFO Swinger Watch Report in the coming weeks. So prepare for that for any of my readers out there that's watching the live stream now or maybe the replay. But yeah. This is one of the major indicators I'm looking out for. We were taking a look at this back in 2022 as well, so I gotta bring it back, right? Because we're kind of following the same path here, and obviously we know what the stupid administration is about to do with overall money and inflation, and obviously the jobs market, and obviously the entire administration goal is to really run the economy so hot that they have to well, it's a complicated process. I'll go more into it later, but essentially, with the potential new, well, I won't even say potential now. I mean, it's confirmed at this point. But the new chairman, Kevin Warsh, a friend of Epstein's as well, mind you, and a good friend of Trump probably. His entire goal will be trying to cut rates into the end of Trump's second term. Even though it might be not a good idea, and even if rate hikes might be on the table by the end of this year, that's a real possibility, guys, by the way. And I'll be talking about more of that in the CFO Swinger Watch Report next week, because we have the next FOMC meeting coming up soon in May, May, I believe so. I don't know why I'm doubting myself. No, in April. Yeah, no wonder. Of course. At the end of April, I was thinking of the early May, like maybe the first couple of days of May. But yeah, April 28th and 29th, the last week of April. No wonder. My brain just told me that I was wrong about that. So I guess I was right about doubting myself there. But yeah, that's essentially it for the overall market. And I just want to give you guys a little surface level insight as to what I'm expecting for the rest of this year. And for any of my readers of the CFO Swinger Watch Report, remember that timeline, late Q2 to early Q3, okay, of this year. All right, with that being said, let's talk about the very first, well, the first and last ticker that I want to talk about tonight, and that is INSP, or if it's gonna freaking load. God, the Wi-Fi here has been so bad lately. Inspire Medical Systems. So I am bringing this up because something interesting has popped up. Okay, and this one, let me actually show you guys it. The reason why I want to take a look at this one. Okay. Let me give you guys the reason here. If it's gonna load. Hold on, guys, just 1 second. But here, analyze the chart here. Okay, so as you guys are waiting here, take a look at the monthly chart for this ticker. I mean, it's absolutely insane. It should be loading here. Maybe I can just maybe I can just bring up my report and give you guys a little. Okay. You know what? Let me just show you guys the. Let's do the easiest thing here that should load correctly. Oh my God. Okay, there we go. Woo. Okay, so the reason why I'm looking at INSP, it's a pretty, it's not a great reason, but something piqued my interest on this name, and that is, well, on the options chain last week. Dun dun dun. Trying to make it more sound more crazy here, but where is it? Oh, there it is. Okay, do you guys see something odd here on the options chain here between calls and puts? There's one contract that seems very out of place here. Yes, if anyone said this out loud. Well, take a look at the $70 strike call contract. Look at the open interest. 12,464 contracts in open interest, and today alone does 169 contracts, which is pretty it's pretty odd. It's pretty odd. Okay. Now, today there's also, so this is from last week, okay, because it's already in the OI, but today there's another volume here, 769 contracts in volume on the 90 strike put contract on the same expiration date of May 15th. So I didn't get to check this, but this might be sold, right? It might be a 90 strike put contract that was sold, right? So, you know, this might be that whoever sold this potentially using maybe 700 contracts or 750 contracts to sell to open this 90 strike put contract could be saying that share prices can be up a lot more than 90 bucks here, right? The underlying share price. And whoever this is, right, the 70 strike call buyer that bought this position to open with 10,000 contracts. That's right, someone bought 10,000 contracts to open up this position to buy the 70 strike call contract. Okay, and this one doesn't get too many options activity on this expiration date. So this expiration date is clearly telling us something with the puts and the calls here. All right, so the calls from last week and then the puts today. All right, this is pretty active. So I need to see if this one was either sell, right? Sell to open, or maybe someone was actually selling, whoever was holding the 90 strike put contract last week, right? Because I mean, this is pretty similar right here. So if the 700 overall 700 contracts in volume gets added to OI, then I will know that maybe someone for sure has sold 90 strike put contracts to open. Okay, so this is interesting to me, right? Something is happening here. All right, so with that in mind, okay, with the unusual options activity, which again, I am looking at this and I put it in the UOA table of this week's CFO Swinger Watch Report. So if you guys want to know what the rest of my UO table has and consists of, what other tickers, right? Make sure, what other tickers have with the UOAs, make sure you guys become a reader of the CFO Swinger Watch Report tonight, and you guys can access the report by clicking on the second link down below in the description box. All right. Okay, so now what is INSP? What do they do, right? So they are a medtech company, a medical technology company. And if my memory is correct from what I briefly read about this company on their website, by the way, a lot of the medical tech companies or just medtech companies or just overall biotech companies, they have a pretty good summarized mission and goal that they have as a company on their homepage, on their website. So if you guys are always confused as to what a company does, just search up the name of the company and they should have a landing page or just a website, and you guys can read it. Okay, so this company specifically markets themselves as a company that provides solutions for sleep apnea. Okay, and I believe they are the company that only has I'm pretty sure it's the only FDA approved treatment for sleep apnea. I think it's the more of the, not the mild sleep apnea, but kind of the more severe symptoms from sleep apnea. Okay, I think the official medical term is obstructive sleep apnea. I'm using my little biology pre-med background here. I remember that. I think it's OSA. Yeah, OSA is obstructive sleep apnea. Okay, and it's the only FDA approved treatment that they have, but this company provides these medtech, these tech treatments, technology treatments for OSA. Okay, so this company is really just focusing on that specific disorder, the sleep disorder, essentially, right? And I think they are now trying to roll out their next treatment, their next treatment hardware, I think is what was the right way to say this. Right, medtech treatment hardware called Inspire 5. Okay, so I think that this is kind of where maybe there could be potentially a company that is looking to acquire this new set of hardware, this new treatment hardware, technology hardware from Inspire Medical Systems, and maybe that's the reason why we're seeing this massive amount of contracts that are bought, these UOAs, right? That maybe someone is potentially looking for a buyout. And again, this is the reason why I titled my stream, right? Is there a massive buyout coming, right, for this company? Because that could be true, right? There could be a potential medtech, larger medtech company, or maybe a potential medtech company that has been growing their portfolios of smaller medtech companies that specialize in one specific area, and these bigger companies are just looking to widen their portfolios, right? They want to widen their revenues and widen just their overall business. Okay, and INSP can very much be an attractive contender for an M&A, right? Merger and acquisition, or for a buyout, because this company has been actually holding some very good margins. If you take a look at the profit margins, I'll show it to you guys on Koifin here. So you guys should know I love to use Koifin. Again, I'm not sponsored by that. I don't think I'll ever be sponsored by these companies, because I mean, I personally use it. I'm not asking for a sponsorship. So let's see. I took a look at this before, so let me bring it up. Here we go. INSP. Here's my screener. Fundamental financials that I made. Okay. So for a medtech company, they're not bad. I mean, just take a look at their gross profit margins. 85%, almost 86%. That's amazing, right? And they maintained for the last 3 years over 80%. And they even reached, I think, back to like 90% in 2021. Okay, so that's pretty cool. All right, that this medtech company has been able to focus on such a significant area in the medical field regarding diseases, and especially sleep disorders, and they've been able to actually have really solid profit margins. Yes, their overall cash and short-term investments have gone down a bit, and the fact that the total debt has also not gone down as much. But hey, just the overall ratio here between the cash, the overall liquidity as a company, and overall total debt that they hold, not bad at all, right? So their overall financials are pretty solid for a reason why a bigger medtech company might want to acquire them, right? This is not bad at all. And they're operating in a very, very financially sound manner, just based off of these financial metrics that I use here, right? Just the surface level financial metrics that I think every person should be looking at if they're looking for an overall initial assessment and analysis on a name that they want to invest in for the long term, right? So, total debt, cash / short-term investments. This can also tell you kind of the overall cash run rate cash that they may have for the next couple of years, and also obviously the repurchase buyback programs that the company may be having, and they do currently have one, right? About $50 million that they have repurchased so far. That could provide more value for shareholders in the longer term as they buy back their stock, right? And obviously the gross profit margins and free cash flow, which is staying positive, right? Yes, they've had a lot of negative quarters where their free cash flow was negative or just barely positive, right? But you clearly see here, right? The trend has been where the positive quarters where they had positive free cash flow has massively increased, right? And so it seems like this company has been becoming a bit more financially sound, right? And just the overall profitability, right, from the free cash flow perspective, is doing okay. They're doing good, right? So overall, what I'm trying to say here, clean financial balance sheet, right? I mean, just based on just these two financial metrics alone, right, the balance sheet is sound. Okay, so you know, I think overall this is a very good medtech company that could very much become a nice contender for a buyout. And the fact that we have this massive UOA last week and even today with a 90 strike put contract that could have been sold to open, which means again that potential trader could have could be betting that this company shares are worth more than $90, right? They're saying that if you sold the 90 strike put contract, they want the underlying share price to be over $90 in order to collect that premium, right? So you know, I think it's this company definitely seems to be leading in specifically sleep disorders, like I said earlier, right? And I think based on how they've been operating so far as a company in the last couple of years, especially as they've grown a bit more financially sound and they've focused on profitability through, you know, probably through more efficient business operations, right? You guys might be wondering how I know that. Well, just take a look at these. Right? Take a look at the gross profit margins, the consistency in the gross profit margins, and the growth in the last quarters, and also the positive free cash flow, right? I mean, this is something that you guys should be focusing on, right? The fact that they most likely have been efficiently running their business. Well, they've been running their business more efficiently to provide more profitability for the company, right? And obviously more returns for the investors. But after all of this, okay, you guys can see that INSP shares have crashed to the downside. And so this makes me think that this is a simple market re-rate for a potential buyout. Does that make sense? Is that making sense for everyone? I've been yapping a little bit the past like 5 minutes, but that's what I'm trying to tell you guys. Right? So I really think that if this is a position that works out great for everyone after the stream is done, please let me know. If this gets bought out and you guys got in through this stream, please let me know. If this goes to $90 or even higher, maybe it reaches triple digits again, right? Again, I personally think based on what I've seen so far fundamentally from this company and the fact that we have this massive UOA, maybe again, it could just be the fact that there's some news about this new rollout, about the rollout of this new tech hardware for their sleep disorder market that they currently reign over other companies, right? This is clearly a leader, even just based on their fundamentals alone. It just screams that they're a leader in this specific space in medical disorders. But just based on that alone, the fact on top of that, with the UOAs on the options chain, and the fact that we've seen basically a market re-rate or just an overall absolute smashing of the current valuation of this company. Again, the valuation right now sits at after today's close, right, at 1.55 billion, right? So it's a small cap company, right? So if you guys remember, a small cap market range, okay, goes from here, let me show you guys, 300 million to 2 billion. So they just went back down to a small cap company from a mid cap company, right? So you know, I think for companies like this, and even companies like PRCT, so this is one of the other companies that I've been talking about a lot last year, but I'm still focused on this year, by the way. Unfortunately, I was pushed out in the most recent earnings back in February here, but I'm really still looking at this company again because this can again still be bought out too. But anyways, the topic for tonight was only INSP, so we'll talk about PRCT later. But these two names, PRCT and INSP, have really been focusing on a specific particular set of disorders, right, or diseases. And INSP is specifically for sleep disorders, right, and other problems that regards respiratory diseases that come from sleep disorders, right? So I think if you combine all those reasons, I think this overall move down could definitely be market makers just trying to make this company as cheap as possible for a potential buyout by a bigger medtech company. Does that make sense? So hopefully I have provided you guys with a potential banger here. Yeah? Give me a thumbs up. Give me a thumbs up on the stream down below if you guys think that I'm giving you guys a very nice potential buyout here. Now, here's the thing. There are high risks involved with any type of medtech or biotech companies. You guys should know that, or even just overall pharmaceutical companies, right? One specific data from a clinical trial or even just a preclinical trials can completely shave over half of a company's market share overnight, right? I've seen this happen to me multiple times. It's the reason why I don't really like to get involved with medtech, biotech, as overall pharmaceutical companies, because it's stressful. And I have a lot of investor friends who are biotech specific investors who, man, they go through a lot. But I always learn a lot from them because they are also actively involved in the biotech industry in their daily jobs, right? So I trust what they say. I almost went into bioengineering as well, and just the overall biotech industry, but I chose to go towards the pre-med pathway. But anyways, you know, I think it's interesting to see that this specific company has been such a leader in itself, in its small industry or sector, right? Just as an own industry here. And the fact that the underlying share price have been absolutely battered from the highs of 2023 all the way back down to the IPO's lows here, or the IPO range at the very least, tells me that, hey, this is a clear market re-rate, and I think something's about to occur here, even based off of the UOA alone. Again, let me show you guys the UOA. Right, something's happening here for May 15th. And hey, if nothing happens, oh well, right? Maybe I can just roll out. Maybe this specific trader might roll out to a further expiration date because this trader might know something, right? So yeah, I mean, there you have it, right? I really think that INSP can be a potential opportunity. So please watch this. Maybe grab some equity if you guys don't want the leveraged risk that you guys will take on if you grab exactly the 70 strike call option contract that has a current open interest of 12,464 contracts with a volume of 169 contracts today. Or you might want to grab 100 shares of this stock and then sell 90 strike call, sell the 90 strike put contracts. Who knows, right? But I'll also be taking a look at this tomorrow. I don't know if it's a trader that was holding this one and decided to sell today, because again, the OI and the volume is clear. It's clearly someone was holding 700 contracts of this specific put contract here on this strike. So I need to see if this volume gets added to OI, or the OI is gone. That means, or if the OI is gone tomorrow, that means this volume was clearly telling us that there was someone who was holding this one for a long time, this specific put contract, and they sold out. Right, they got out the position. Okay, so please keep your eye on this specific contract today that we got today into tomorrow morning. And yeah, that's it. I just wanted to give you guys a quick rundown as well. If let me choose my words carefully. If this buyout comes, well, it might be on this name. It really might be on this name. Okay. So hopefully this is a very, very good a stream where it could potentially give you guys some really good returns if this comes into fruition. And even if it's not a merger and acquisition catalyst, M&A catalyst, it might be, again, maybe something happens with their rollout of the new treatment, their new tech for the treatment of their OSA, right? OSA devices. Right, that can treat OSA, excuse me, right? And this treatment, these devices, I think it's like a neurostimulation, right? Because it's a, I think, yeah, neurostimulation treatment for OSA. So, yeah, I mean, again, this is the only company out there that specifically is involved in the sleep disorder industry that has an FDA approved, which is amazing, treatment for OSA, right? Obstructive sleep apnea. Okay, All right. And again, this is who knows? This might be attained by a larger medtech, even a surgical tech company like ISRG, even though that's not really in their. I don't think that's really in their industry. But who knows? These big companies, they like to consolidate and grab smaller companies that have been doing great and add it to their own business operations to widen their cash the cash and their revenue, right? And just basically instigate growth like that, earnings growth and revenue growth. So yeah. Okay, so INSP, please take a look at it. This was just in the CFO Swinger Watch Report this week, last night, when I sent it out to my readers. Hopefully this is going to be a ticker that you guys watch in the future. And who knows, I might even just do another review on PRCT again. Okay, this is a more of a surgical tech company, not a med tech company. But I mean, basically the same thing at this point. But if you want to be more specific, this is a surgical tech company that specifically focuses on surgical robots, right? Specifically for surgery, hence surgical, right? So I might go over this again because I did have a video on this one, ProSet Corp. So. All right, that is it for tonight, guys. Please go over and watch the replay again for what I've talked about with the M2 and M1 money supply. And yeah, I'll see you guys on Wednesday at the same time at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. And good luck tomorrow.